Hi, everybody. Welcome to Sonu's Mashed Bananas podcast. And today we're going to talk about a topic that everybody is buzzing about. It's marketing and finance. Don't take it in the literal sense. Going to talk about our insights related to marketing and finance and probably get you guys updated with what's going on today.
Sounds good. Well,
All
thanks
right.
Hey, everyone.
So back to my friend Jennifer.
Hi.
Hey, how you doing?
I'm doing all right. How are you today?
I'm good.
Thanks for having me back.
Anytime.
I had fun last time, so it's good to be back.
Yeah, absolutely. And also with a couple of new things that we are exploring. Your new company, Frontline Strategies.
Yep.
Can you tell us a little about that?
Sure. Frontline Strategies is founded in this idea that if you have a strategy and it doesn't connect with your people, including your frontline, it's not going to be a very effective strategy.
Gotcha.
So in a nutshell, what Frontline does is we help companies with their strategy, whether it's marketing, digital, your area of expertise, AI, and really help them, sometimes fill in for talent that they're missing in the organizations. And at the end of the day, we're all about growth, helping companies grow.
Exactly. Okay. Pretty interesting. And I deal with, I just started exploring about, I won't say I just started exploring. I'm a late bloomer into the stock market space and, trying to play the market a little bit, try to, gain something from it. And, so initially I was a dividend investor, trying to, earn dividends based on long-term, outlook. But then I realized it was way too slow for me, especially for people, after 35 when they start, dipping their fingers into the stock market and finally, you get that, whoa, I didn't even know this whole world existed and I can understand it. I connect with it and I can start making money finally,
Yeah.
the most boring topic when, I was younger. My dad always pushed me to get into it and, but I think I was just way too stupid or just too involved with too many other things that...
distracted might be a better word, right?
Yeah. Lazy too, you could say.
Maybe. I don't know.
Or maybe it just didn't interest me. It was boring. But when I started exploring and I started, setting some weekly and monthly targets based on how much I should gain, I started to realize how interesting this is. So the first thing in the morning when I wake up is I start looking at stocks, looking at markets, looking at, various aspects that frame this market.
Yeah.
And I start, mentally tracking which stock I should invest in, when should I buy, how much should I buy, when should I sell, what are my margins, how much taxes am I going to pay across these. And then I started getting into option trading. Oh, I can make more money doing option trades. And I haven't gotten into futures or derivatives and things like that, but just dipping my fingers now into the options market. But at the same time, I've also helped a lot of friends.
Yeah.
Rise from a deficit to finally, realizing their P&L with green numbers that they wouldn't have expected. So I kind of, I'm not an expert, but I could talk about it.
Well, I mean, a lot of people probably out there are probably a little stressed out by money. I think money is probably the biggest source of stress in most people's lives, right? So why don't you just tell them a little bit about how you can just get started? Because, you talk about options and derivatives and futures. And even for me, and I have an MBA from the University of Chicago, that scares me a little bit when I hear it. Like, tell us how you just get started. I mean, you have that WhatsApp group. I'm a member of the group. You give a simple little pieces of information, but I think there's a lot of people that just don't even know Sonu how to get started. So what do we do?
Well, here's what happens, right? There's a lot of people, they don't understand how the stock market works. It has a set of rules and principles. And you understand it, you get to know it. You can get to a point where you can make calculated decisions. And most times it will work. Sometimes it doesn't go the way you want it to swing. Right? But just blindly going in and investing in the market, not knowing, not researching enough, not understanding it enough, that's where a lot of people gamble. That's what I call playing the roulette. Because there was someone asking me the other day, I won't give names, but someone was like, hey, this stock is cheaper. Why don't I just put all my money in this stock? I was like, it's not about how cheap a stock is. You know,
Right.
go play penny stocks then, you know,
Right.
they're a whole lot cheaper.
Right.
So what I do every day out of interest, not something that I'm forced to do, I just love doing it, is, you know, trying to gauge the market, the sentiment that is there in the market. There are a watch list of stocks that are in my bucket that I monitor every day.
Yeah.
I look at their financials. I look at their earnings report. I look at their PE ratios. I look at their, you know, debt ratios, and you know, what is their, you know, guidance during earnings. You know, and then if there are any controversies or rumors that are floating around the market in the financial space, how is it going to impact them? You know, it's very sensitive. And then there's all this other thing about insider trading and, you know, various institutions that have purchased and what is their analysis on a specific stock. So I kind of read through all of that. But when I'm looking at a stock, I basically, at least for me, I'll look at, if I'm stock screening, I'll look for a stock within a specific industry.
Okay.
And, you know, how well that stock is positioned. When I talk about stock, the organization is positioned. And, you know, what is it net worth? What is it market capital? What is it, you know, what are the financials? How has it performed in the last rolling 12 months, 4 quarters?
Okay.
Have they been profitable?
Okay.
You know, what is the market expecting out of the stock, and versus did it beat market expectations or no? Because the stock can still be profitable. You can get more revenue, but if you don't meet market expectations, it's going to fall.
Yeah.
So, and then basically I look at various trends. You know, I look at the year-to-date trend, the 5-year trend, the 3-year trend, the 1-year trend, and how it's been doing in the past couple of months. I look at the trajectory that the stock has been trading. You know, I basically look for swings within the trajectory, whether, you know, is it hype? Is it overvalued? If a stock is undervalued, I look at the intrinsic value of a specific stock, which is the actual value. A stock may be worth $1,000, but what is it actually worth on paper? Maybe 200. But you know, it's all this hype and sentiment that pushed the stock really up and overvalued it. And then I basically look at what analyst projections are on the stock, whether it's a strong buy, a hold, you know, or a sell. And, you know, and I basically also look at its competition, how its competitors are doing. And yeah, mainly indexes like the S&P 500, the NASDAQ. And I compare the stock against that and which bucket it falls under. And if, you know, if the indexes are doing well, but the stock isn't doing so great, okay, why? What's going on? If the indexes aren't doing great and all the stocks are falling, I can understand that, you know, it's just a market today. You know, you can basically have, you know, Jerome Powell talk about interest rates. I think he talks about interest rates, but I'm not 100% sure. So he talks about interest rate, they talk about job market, they talk about inflation. You know, all these things influence the market, how it's going to swing.
Right, definitely. So, but like going back to my question, like, so to get started, do you think about, all right, I have a certain amount of money I want to invest, I have an online account, right? And do you think about, okay, I have this much risk appetite? I mean, does someone need to be thinking about that too? Because, you know, I would imagine some stocks are more risky than others, but maybe the upside is greater, but then the downside could be greater too. So how do you think about that, Sonu?
I do think about it. And like I said, you know, stock market is like you'll be playing a roulette if you don't know how you're going. I can take more risk right now because I understand the market.
Right.
Right. I know to a certain extent, based on my calculations, based on my based on various parallels that frame the trajectory of a stock and how it's going to do, based on how the financials of the stock are. I go back to the same fundamentals all over again. There's no other formula. You have to know your market.
Yeah.
And so I have an appetite for higher risk. And that's why I like stocks that are highly volatile, because I can make more money. I can have,
Right.
if a stock is going down, I can still make money.
Right. Definitely. But that might not be for everybody, right? I mean,
Exactly. So I would say when people want to start something, investing, I think they should look at good stocks that have been in the market for quite a while. Well-known stocks. I'm not going to go into the technicals right now, but I would say, you have your Teslas, which is volatile, but it's still going to do good. You have your Chipotles, you have your, SoFis. And why am I picking these stocks? They're different industries that they come from. These stocks might not do well, but we know. I mean, when I say they might not do well, I'm not saying they won't. There's certain days or certain weeks or certain months they might, keep swinging, fluctuating up and down. But these are very good stocks. They have very good revenues. They have excellent profit margins, and
they're stable, basically.
Yeah, exactly. I mean, I wouldn't say they are stable, but yes, they're not something new. Like, for example, we had an IPO on Figma. Such a hype. It went over $120, $30.
Yeah.
When the IPO was on. If somebody had put their money in Figma saying, oh, $130, cheap. Let me buy 1,000 Figmas right now. Right now, the stock's trading at 80.
Right. So
it doesn't have any history.
Right.
So,
So, yeah. So what you're saying is looking for those that maybe aren't 100% stable, but they have a little bit more track record.
So coming back to your question, what is my risk appetite? That depends on you. How much are you willing to lose, and how much are you willing to make? Where do you want to see your money? How you want to, what is the trajectory you want to do with your money, right? 5 years from now, I have $5,000. I want to make at least 10 to 15% year on year with my $5,000. I can either put it into my brokerage, the money market, and let it collect interest at 4%, which is also not bad.
Yeah.
Or I can invest in some good stocks, hold on to them, and reap the dividends every year, because that's dividend investing. Or I can buy the stock low and sell it later at a profit. Even small little movements and swings will still get you enough money. So let's say you're playing the stock market, you're making $300 a week. That's $1,200 a month.
Right.
Just buying and selling stocks for small little amounts of change. That is over $12,000 a year, or $13,000 a year if you are making $1,200 a month, just investing in stocks.
Well, it seems like you're talking a lot about, I call it the DIY, the people who want to do it themselves. But then there's these people like myself, actually, who have counted on an investment professional over the years. But it seems like the approach of asking good questions, being informed of what you're investing in, is still really important, even for people who work with a professional, don't you think? Because, people can't just mail it in and just assume that everything's just going to work out for the best. So tell me a little bit about it, like how someone like me would work better with my investment professional.
Okay. So when you're working with a professional, let the professionals do the work, because they know what they're doing. At the same time, there's always a disclosure where, they disclose what, the stocks or dividends or bonds or investing your money in. So what I would tell everybody is don't if you don't know a lot about the stock market or the market in general, don't go deep dive into that. It's not gonna help you.
Right.
It's what you should know is how much you're making.
Right. Yeah.
I put $5,000 and I gave it to an investment professional. What am I getting out of that? Am I getting 7%, 10%, 15% year on year? How's my money growing?
Right. So basically, you're saying just don't mail it in. Be asking questions.
Yeah,
understanding
because
what you're getting, and
now when it comes to me, and I do my own investments. However, my 401k is being managed by a different company. So I asked them a lot of questions. Hey, you know what? Don't invest in this ETF or a mutual fund. Move it to a different one.
Got it.
This is giving more dividends because this specific ETF is just energy utilities and it's not aggressive enough. It'll grow over time.
Yeah.
But if you're going to put 20% of my money into this, I mean, you put 10% into that.
Yeah.
But I at least want 15, 20% into technology stocks or AI stocks, at least for a period of 6 to 8 months to see how it's doing. And if it's not doing well, shuffle it with something within the same industry, right? So when I have ETFs in front of me, when I have mutual funds in front of me, I see where they're, top 15 or top 20 stocks where, within that ETF or mutual funds, what are my top 10 and my top 15, 20 stocks.
Right.
And what is the percentage that the ETF has invested in these stocks? That gives me an idea how an ETF is going to grow. It gives me an idea about the dividends that I'm going to collect based on that ETF. And when I invest my ETFs and mutual funds, even for my daughter that I'm invested in, they're good mutual funds and ETFs that give me quarterly dividends. However, I've also invested in some mid-cap industries that give me monthly dividends. So I keep having something recurring.
Well, it seems like whether you're working with a professional or whether you're doing it on your own, having I call it like a portfolio view, like a well-rounded view, is really important. You can't just bet on one thing. A lot of people think that they can bet on one thing and they're gonna, make $1 zillion. But it seems like what you're just talking about is kind of well-rounded strategy. Tell us a little bit about that importance of thinking kind of, I call it holistically, about your whole portfolio.
A lot of people that I've seen go FOMO on the market.
Yeah.
You got to have a lot of patience. You got to reduce your greed index a little bit.
That's an interesting comment. Yeah, the greed index, yeah.
You can't make money overnight. Then that's gambling, right?
Yeah. Must be nice, right? Go to Atlantic City or wherever, right?
You just made $1 million, and then you go gamble that away, and then you lost everything.
Yeah, exactly. Yeah.
Right? You got to have patience. Learn wherever you're investing money. I mean, I've learned based on my mistakes. Right? And one of my biggest mistakes right now, it's not a big mistake, but I can't cash out right now. I gotta wait for another maybe 2 months to cash out on. So I purchased. I had invested a lot on Chipotle. As a stock. So this is an example, right?
Yeah. It
was trading at $60. And then all of a sudden, Chipotle, based on multiple factors and everything, drops to 55. And I'm like, oh man, dropped at 55. Let me just buy 100 shares at 55. So I go buy it at 55. Because, and I'll tell you why. Then it dropped to 47. And I was like, man, that's so unusual for this stock to fall so much. Because it has a very good outlook.
Yeah.
Right? And recently, although it was profitable, they didn't meet market expectations, so market was dumping that stock.
Got it.
Right? And it's a great stock. They have a very good vision. They got very good outlook. They have very good... Well, the guidance for the next quarter or the next year wasn't very straightforward by, the CEO who basically was talking to everybody during the earnings call. But long term, that stock is a very good stock. If it falls by a couple of basis points, but it doesn't really drop. Like it doesn't pull back. Because this time it had higher lows.
Yeah.
Instead of having lower lows.
Yeah.
Instead of having a slight pullback.
Yeah.
It totally regressed. So it went down to 47. I bought 100 more. Then went down to 45. I'm like, man, I'm putting all that money in this. I bought 50 more. Then it went down to 42. I'm just like, I don't have that much money, but just to break even, to I forgot the term that they call that. Buy at every dip, so you can break even at your average price. I forgot what they call it. Damn, I can't. Anyway, went on to 42, and then after that, I was like, all right, I'm tapped out for this stock, Chipotle, right? Right now, I'm like, it can't go below 41.
Okay.
Right. That's a very good stock, and it has very good market potential. I see that stock going up to 58.60 again.
Right.
Hopefully by November, January.
Okay.
So I know for a fact, no doubt about it, I'm gonna do really well with that stock. But that's 3 months off. Well, so now what happens is it kills my weekly targets that I have set up.
Yeah.
Right? So that's why, to make up for this, I finally sold Micron yesterday. I made a very good profit on Micron. I'm waiting for it to pull back a little more, and then I can, go ahead and buy it.
Got it. But that's Chipotle is, for me, is an example of you have to have a little bit of a long-term outlook too. Like if everything is short-term gain and you bet your farm on on that one stock, you could be pretty disappointed, right?
Right. Yeah. So that's why I diversify. I have a portfolio only for long-term, and then I have a portfolio for just my short-term stocks because all I want to do is trade.
Right.
Right. I want to make something off of it. I want to make my 50, 100 grand to at least about 30, 40 grand more every year. At least that's my target. I might not get to 40 grand, but I might get to at least 25, 30 grand. So if I have 100,000 today, by the end of this year, I got to have at least 130,000.
Right. But it seems to me like if people want to do the short-term gain, like because you're pretty disciplined, right? You told me you get up in the morning, you wake up, that's like the first thing you do, maybe even before your coffee, right? But if someone doesn't have that time or that patience to really study, is that a good idea for them to be doing short-term gains, or should they play a little bit of the longer haul game? What are your thoughts?
It's case by case.
Okay.
You can monitor your stock. Most of my purchases are the first 30 minutes. Not even the first 30 minutes, the first 15, 20 minutes after the opening bell.
Okay.
And then I might purchase a little bit sometime in between during the day.
Okay.
That's how I monitor the stocks. I have a target that I want a specific stock to pull back to.
Okay.
Right? I basically study the candlesticks within that hour on how the stock is doing. I see where there is a lot of sell-off, where the bulls are making, buying that stock. Just by looking at the wicks within the candlestick, I see, wherever I see resistance or consolidation, I sit and, kind of pay attention to a point where I'm not saying 100% of the time it works, but at least I have a 60 to 70% I can predict right.
Yeah.
If it's going to pull back or if it's going to, if the stock is going to go up.
Well, you started the podcast by talking about like marketing and finance, right? And it seems to me that one of the opportunities for these companies, right, is to sell their story to their investors, right? Because you mentioned, if you don't have a good growth story, right, if you don't have a credible earnings call, right, what is, how are you going to grow in the future? If a company doesn't have that ability to tell a good growth story, it seems to me it might not be a great investment. I mean, is that, the way you think about it too?
No. The company doesn't have to tell you a story. You can read all about it when you go onto the company website.
Yeah, but that's telling a story, right? I mean, you have to.
Oh, okay.
That's what I
Okay.
mean
I
by
kind of
that.
misunderstood. I was
Yeah.
like, oh, the company's just going to come in and like.
No. What I'm saying is they have to have like an intrinsic engine for growth.
Yeah, yeah. They
If
have
you don't
to.
believe the company's going to grow, then I don't know if they're a good long-term buy. I mean, 'cause,
Exactly. They got to give you some good guidance
right?
into what they're doing,
Exactly.
what their plans
That's what
are.
I mean by the story.
Right, right. Okay, I get you. On how they want to expand
Yeah.
into the future. What are they targeting? And every investor has this question: how much do you think your EPS is going to go up by?
Yeah.
Whether your earnings are going to go up by?
Yeah.
Right? Are you going to be profitable next year? Is it be quarter by quarter? Are there any new innovations you're coming up
Yeah.
with? Are there any new strategies that you're coming up? That's where your Frontline comes into play, because a lot of organizations reach out to you to market
Right.
their brand or their product, or how they want to position their organization. That's very important. So you work with a lot of banking companies, so you basically have some sort of a vision on how the on how they want to basically showcase their organization is doing.
Right.
But earnings calls are a little different, because they're basically like a quarterly report card,
Definitely.
and they're just doing a performance review of their organization
Right.
quarter by quarter.
Right. It's definitely in the moment. I get that.
Right.
Right. But I think like having come from, for many years before financial services, I worked in retail. And one of the challenges for many retailers, and you see so many of them have gone out of business over the years, is they thought the only way is to, open new stores to greatness. But there's a limit to that, right? There's only so many stores you can open, right? Because at the end of the day, companies need to be thinking about, how do I bring in new customers? But then how do I, what I call, deepen relationships with existing customers, i.e., how do you get people to spend more? Right? If you're bringing your shopping cart into a grocery store, how do you get people to add more to the cart? Right?
The people are only going to spend when they find something worth it.
Exactly, right? And
you are giving them quality. You're giving them a product or a service that is worth their while, that they're willing to pay. And that's best. And that's why I don't believe the hype with Apple, because I think Apple is very stagnant right now.
Interesting.
I think that, I'm not against Apple,
Yeah.
but I've never invested in Apple. Only for the mere fact that it's the same phone every day. Every year.
Yeah, there's a lot of incrementality right now.
Literally the same feature.
Yeah.
Their chips will change a little bit. The design changes a little bit.
Yeah.
But it's practically the same thing.
Yeah.
Like, I have a phone that's over 3 years old. It's an Apple iPhone. I don't know. Unless that phone dies on me, I'm not going to go get me another Apple.
Which is totally different from the Apple of a decade ago, where it was new products, new services.
Oh my God! Back then it was like
the touch, the innovation factory, right?
Yeah, like totally.
Yeah, that's why I think that so many companies really need to be always thinking about what's innovative about the way.
Tim Cook's got to come up with something.
Yeah, I guess so. He's got to cook something up, right? Yeah.
Maybe, I don't know. Maybe. A new car, an Apple car or something like that. I don't know. I remember they were talking about it.
Yeah, definitely.
But I don't know what came out of it.
Well, tell me about, a lot of times people, get enamored by these companies that are I call them one-trick pony. They have this one great product. I used to work in the toy business, right? And I don't know if you remember, well, you have a young kid, so you'll get what I'm saying. Like that one hot toy of the season, right? It's like what that company bets their farm on. But they only have a one-hit wonder, right? But they don't have anything else. And I think a lot of companies are like that. They have a one-trick pony. How do I think about it as an investor in those kind of companies? Should I be thinking about, riding the short-term wave with them? Because, sometimes I'm worried about, do they have anything else after that one-trick pony?
So, well, it depends, right? I wouldn't invest in a stock that's not diversified.
Okay.
I'm sorry, in a company does not have a diverse range of products and services.
Okay.
because some might work and some might not.
Yeah.
So that's where I take calculative decisions, right?
Yeah.
For example, for a long time, I had very big, you know, aspirations for Rivian,
Okay.
the car company.
Yeah.
They do only electric cars,
Yeah.
right? Unlike their competitor Tesla, that I've heavily invested in. I have a lot of stake in Tesla, and it's kept me happy. They're into SpaceX. They got X. They got this entire range of,
Yeah.
they got electric vehicles. They got FSD. They got, they got these, oh man, robo taxis.
Yeah.
They're into robotics right now.
Yeah. And they got a roadmap, like they know kind of where.
Yeah, and they know, and exactly, they have excellent guidance. Very little debt. Rivian is backed by companies like Ford, Amazon.
So it's got a solid.
I think it's
backing.
Ford, but yeah, but it's still tanking. It's not, it's not playing its hype. And if the company doesn't do well, what happens to this car? It's like, I bought Rivian with a long-term outlook.
Yeah, thinking it was gonna continue to.
I sold it at a loss, but it was not a big loss. About $300. I made up for that $300 somewhere else. I mean, so I took all that money and I put it in SoFi right now.
That's the classic example of cut your losses, right?
Right. SoFi has a full range. I'm not going to get into that right now. But talking about a one-time wonder, there is this company that I've invested in. It's an upcoming industry. It's called Evoc Pharma.
Not familiar with them.
Trading at $5 a share. And that company they're not very diverse, at least not that I've known about Evoc having a diverse range of products and services. It's just got one drug called Jamoti, which is for people who have diabetes, and they have gastrointestinal problems. I don't know how to pronounce it.
Gastrointestinal, yeah.
Yeah. So they have this drug called Jamoti that basically will sort of, heal them or kind of take care of them.
Yeah.
So that stock really shot up because they got it approved by the FDA. Their license got reapproved by the FDA because you got to, reapply for your license to have that. And this is part of the FDA's Orange Book as well, which is a big deal. Now they get listed and recommended across pharmaceuticals, pharmas, across the country.
Yeah.
So this company, although is pumping a lot of money in R&D, they have negative revenues. They haven't been profitable in the last 3 quarters.
Okay.
But I do see a short-term potential. Short-term, not a long-term. I do see a short-term potential with Evoc Pharma. Now, they don't really have the money to diversify unless someone, unless they're backed by another big pharma.
Right, got it.
Or, But what they're doing is very, very different from even what the biggest pharmas couldn't do.
Got it, right. Plus, we all know that diabetes is on the rise, right? So it's kind of like, it's a global market. It's not.
If you ask me, almost everybody's got diabetes. I won't even say 1 in every 5 people. I would say almost everybody that's walking around is walking around with diabetes because that's just the way it is. How it's been, how a lot of products have been packaged and said are safe but are unsafe. I don't want to get into that discussion, but yeah. So I'm just waiting. I have 1,000 shares of Evoc Pharma. I am waiting for this company to. My trajectory says that they're going to hit about $18 by next year.
Okay. All right.
And hopefully, because they're coming up with something more, so there is an outlook tied to Evoc Pharma. And the analysts are also talking about that it's going to hit 18 eventually. Because that stock is pretty undervalued, if you ask me.
Got it. All right, that's interesting. But that's an example of where you're just very informed about the stock. You know kind of what you're getting into. You're not just believing the hype. Like you studied it. You have kind of almost like an exit plan, right? You kind of have an idea when you think you'd want to
I dig
get out
deep.
of it.
I try to get into the stock. I do a lot of stock screening. I try to find out new stocks. For example, there is this one company called Lam Research. LRCX is the ticker. I love that company.
Why?
No one talks about it. Not a lot is known about that stock. At least,
Yeah.
it's not like a everyday stock that people talk about.
Right.
But they manufacture parts for semiconductors. So companies like Nvidia, companies like Micron, companies, and their competition is pretty. I mean, they have a tight competition with ASML. That is a competition to Lam Research and a couple of other, you know, chip making companies.
Yeah.
So they've been super profitable. They're as big as, I would say, Nvidia,
Yeah. Got it.
if not equally big. Pretty low profile.
Yep.
Profitable year on year. They recently had a stock split.
Okay.
700 to
Okay.
to 10. Yeah, I mean, I've invested. I've made long-term gains, short-term gains, and they are a very good dividend-paying stock.
Yeah, it's kind of interesting because it's one of those stocks that, doesn't have a lot of the hype. A lot of times I think people fall prey to a lot of that hype, versus, being
And when I
smart.
introduced the stock to my group, everybody was like, "Hey, no one's talking about this. Like, what kind of stock is this?" I said, "They're the pillars, man. They're the pillars of semiconductors. Like, if they crash, it's gonna take Nvidia and all these other companies down
That's
with them."
interesting, yeah.
Now, I'm researching another stock, which is also a semiconductor industry. It's an upcoming industry. The stock is going really low right now. It's called Navitas.
Okay.
And I'm trying to research that. So yeah, I mean, to answer your question, I try to find value in stocks that no one's even talking about. I go and kind of screen them out.
Yeah, I like that. You can't always believe the hype, right?
Right.
Excellent. Well, I've learned a lot. Thanks for sharing your tips as always,
Sure, and we'll have more conversations. I mean, this was more from a stock fundamental standpoint or financial fundamental standpoint. It's not really marketing and finance, but you're a marketing person. So I was like, you know what? Let's make it marketing and finance, and
Yeah, but I think we did tie it in the marketing because, again, like companies need to have a growth story, and marketing at the end of the day is really about growth. Most people think marketing is just telling like stories and branding and all this superficial stuff.
Right.
But at the end of the day, marketing is about really being an engine for growth. And if you don't have, to your point earlier, if you don't have good stuff to offer your customers, there's no story to tell. There's
Absolutely.
no marketing to do, right?
Yep.
So anyway, well, I look forward to learning more from you.
Yeah. And thank you for tuning in. And I hope you've enjoyed this podcast. And if there are any questions, you could please write them in comments and let us know. There is more to come, so stay tuned. Peace.